I didn't unmute my mic. Hi, welcome everyone. Welcome to Mamaliez. Today's show at 4 p.m. is all about Mamaliez wants to learn. It's all about promoting. We are Mamaliez want to learn how to promote on having a healthy and happy lifestyle in areas of physical health, mental health, financial health, spiritual health, and what did I say already? Physical health already. So anyway, today is focusing about on financial health. I'm going to invite my previous speaker before, which is Stanley Hon. He's an expert. He's a practice group director, an FA advisor, a licensed financial advisor, and a speaker, and also a will and trust specialist. So he's already been around for 20 years, and today, in very expert in this in the financial planning area. So today he's going to share with us on how to be a smart consumer and save your premium. I'm sure all of you wonder how we can save our premium, or we don't want to pay too much on our premium. So today is a secret that not many people would know, or even it's a secret that not many insurance agent want to tell you on how to save your premium. So let's invite my special guest for today, Stanley Hon. Okay, bring him forward. Hi, Stanley. Thank you for joining.
Hello, Liz. How are you?
Good, good. How are you?
I'm good. I'm good.
Looking so
So
smart
nice to
today.
see.
Yeah.
Yeah, purposely take my coat to my office today.
Looking so smart today. Thank you so much
Yeah.
for joining us today again for the second time. I
Yes.
you the last time I talked to you so much and have so much fun talking to you. So I have to invite you again to share your knowledge with us, especially in
Thank you.
insurance.
Thank you so much for your invitation.
Yeah, because there's so much to learn in insurance. I still don't know the depth in depth and how we can reduce our especially today's topic on how to reduce our
Mm,
premium. What are the tips that we can do that without paying overpaying too much?
yeah.
And I'm sure my not a lot of insurance agent want to tell us, hey, how this is your way of doing it. This is like a little secret, probably. So today, I hope you can share with us and we can find out from you. Yeah.
Sure.
So
So
I just
basically, yeah.
before going there, I just want to share with everyone. Stanley is also helping right now doing my assessment on my insurance needs. To find out, and he's doing my gap analysis. He's working together with my other CFP, Xuan. One day I will invite him. Xuan is handling with my investment in Malaysia, and he does financial planning and reports for my family's financial health. So he's working together with Stanley in understanding what is whether my insurance is how much insurance we need more. Otherwise we don't know. So now Stanley is going to help us in that part. So yeah, go ahead,
Yeah, I
Stanley.
think I think it will be good if you invite next time you invite both of us. Then we can share more tips about the financial planning. Yeah.
Yes, yes, yes. Maybe one day we will invite both of you.
Yeah. So when we talk about the insurance planning, yes, definitely insurance is a very critical subject. But yet, from our past 13 years of professional advisory services from my client or to my friends, what we noted that is a lot of Malaysians eventually, some of them they are overpaid on their insurance. They're not getting what they want.
Mm,
Okay, and some of them maybe comparing on the price and the cost. I mean, when we talk about the cost and benefit analysis, it seems that
mm,
it's not in balance. Either your premium is overweight, but what you are getting is much more lesser than expected.
mm,
Okay, or some of them is they are paying above average price compared to other insurer in town. Because you need to take note that in Malaysia, for most of the insurance, when we talk about life insurance, the premium is vary among all the providers in town. So it depends on your needs, depends on your expectations, depends on our medical histories, and so on to determine what is the best premium. So for us, is we are acting independently for our client. We champion
mm,
our client interest, and we see what you need, and from there only we will source the best suitable insurer for you. This is how we work on that. I think later I will share more on that. But we
Yeah.
need to take note. Yeah, basically we need to take note. Uh, the basic principle is don't overpay on the insurance premium, and how we justify is overpay or not. We will have a basic guideline, what we call as you only can allocate roughly 10% of your gross household income for the insurance premium protection. If you need to allocate more than that, please talk to your financial advisor and see whether it's due to the medical conditions or whether it's due to the aging factor that you need to contribute higher. Okay, if not, then it should be around 10% of your gross household income. So that will be the basic yardstick to determine how much you can spend on your insurance premium.
So are you saying 10% of our family gross household income?
Yes,
This
example
insurance,
is you're earning 100,000 example. Okay,
yeah.
example you're earning 100,000 per annum. So what is the maximum premium I can allocate for myself is roughly about 10,000 per year. Okay,
So
but when we talk about household, it means
1,000
that it's talking about combination of your
1,000 for
husband
the
and
whole
wife
family.
income.
So
Yes,
1,000 for the whole family lah.
yes.
So oh, okay. But
Hmm.
that 1,000 is for insurance. Is it just for the life insurance
Just
only,
for the
or
insurance. Yes,
all
just for the
insurance?
protection,
Just
all
for
insurance needs.
protection.
Yeah,
Oh.
I'm not talking about the endowment or retirement plan that you bought. I mean, that is more on the retirement plannings or money management or for the investment planning purpose. So for protection purpose, normally the maximum we can allocate is up to 10% of our
Ah.
total gross household income. So let's say
So
you and your hubby, you're earning
mm,
300,000 per annum. So what is the max you can go? Roughly is 30,000 for your entire family members.
so but then you see a lot of people are spending even more than their 10% of their household income, because most of them take like the endowment plan, retire, supposed to be like education plan.
Yeah, that is not
you know
calculated inside. Endowment or education, we will have another 20% on the allocations. So it will depends on your risk profile, on your investment objective. Okay, how long is your investment period? Only then we can select whether you need to go for endowment policy, education policies, or we might help you to construct an investment portfolio. So when we talk about investment portfolio, it can be a combination of endowment policy. It can be unit trust, mutual funds, share investment, or even on alternative types of investment. Now everybody is talking about Bitcoin, right? So I believe maybe we also can allocate part and partial into Bitcoin investment, but the amount cannot be substantial.
Right. So okay. So that means if it's purely for protection is 10% of our household income. Is that
Yes,
correct?
you're right. Yes.
Yeah. But then how would this the people, I mean, how would we know? Because most of the time our agents always propose they never tell us about there is just a purely protection program. I think almost 99%. Most of the time they just say, oh, they just propose the endowment program straight
I
away.
think first of all, we will still need to go back to the consumer itself. I mean, we need to be financial literate. That's very important. So, I mean, it is good if you are able to engage independent and licensed financial advisor to help you to go through the journey together with you. That will be good because we champion your interest, and normally we'll hold your hand and see together what is your needs and what is your journey. This is how
Uh,
we help our client.
so what you're saying is actually to educate ourselves lah. What is
Yes,
insurance?
actually,
What
the best investment, don't talk about share investment or unit trust investment. I think the best investment is you need to invest in ourselves first. I mean, invest yourself with the knowledge, especially on the financial literacy part. That will be very important.
Mm, yeah, I think for me, I was lucky because I used to do insurance for a bit, for a while. That's why I understood that. Okay,
Yeah,
don't trick me. I know the trick already. Don't just show me that only the investment program, or don't just show me the endowment program. Show me just purely protection. I want to see the comparison, you know. But
Yeah. Yes.
most, and I noticed like most of my friends, they don't know the difference. They don't know there are many types that you can just pay just for the protection alone. Yeah.
Yeah.
So
So it's back to the
so
basic money management actually. So whenever you receive your income, you need to be think wisely on how to allocate your money effectively into few money jobs. So with this money jobs, then you can plan ahead. Is on the insurance, investment, or even for your daily expenses, your operation expenses, and even for the emergency funding. So with that, you wouldn't go too far away.
okay, got it.
Yeah.
All right. So what's next? Share me about how we reduce the premium. Maybe
Wow. That is today I'm going to share 8 tips to you.
mm,
Okay. This 8 tips is talking about how you are able to help yourself to become a smart investor. And whenever you wish to buy any life insurance, well, you can use this 8 yardstick to counter check on that, whether it's on par on what you need. Okay, let me share my screen now.
mm. While you're sharing your screen, anyone is online here, please let us know where you're tuning from. Say hello to us, yeah.
Hello.
And if you have any
Yeah.
questions, just write on the comment and then
Yeah. Feel free to ask me any questions,
yes, please ask.
and I try my best to answer
You
on
got
that.
you get some free advice today. Free, no need to pay.
Okay, can you see my screen?
uh,
Screen number.
yes, yes, yes.
Okay. So when we talk about smart consumer, definitely part and parcel of the knowledge that you need to know is how to save your money when we talk about the insurance premium. Okay.
Mm,
So the first one is very important. It will be back to the basic. Because for the life insurance company, how are they going to determine the pricings or the life insurance premium? They will, first of all, it will depends on your health condition. The
mm-hmm.
second is definitely is on your occupation class. Okay, if you are occupation class 1 or 2, it means that you are sitting in the office lah. The risk is not so high. Basically, your premium rate should be lower. Okay, but let's say if you are the blue collar worker, you work in the factory or in the garage and so on, definitely you are classified as occupation class 3 and above, then basically the premium might be increased a bit. Okay, but today we are not discussing about the occupation, we are discussing about our lifestyle. So first of
Right.
all, ladies and gentlemen, are you a smoker or not? This is very important.
Mm,
So if we are the smoker, uh, unfortunately, our insurance provider, they might charge extra on the smoking rate. That's fair enough.
mm.
Okay. So I just give you some comparison over here. Okay. Let me open my pointer. So this
Uh,
Encik Ali bin Baba.
Stanley, right
Yeah.
now I don't know which are you sharing because we are on the first page of your ni.
First page on
Ah,
the first page.
so maybe you want to open wait again.
Wait, I will share again.
All right.
Can you
Ah,
see?
my mom, my mom is online now. Hi, mama. She's watching
Hi,
from
Ali.
watching from SJMC. She's actually
Wow,
in a
how's she?
hospital now.
I see.
Luckily she got medical insurance. Thank God to our agent also,
Yeah, I
Kathleen.
wish your mom will be recover very fast. Have a
Yeah.
speedy recovery. Send my regards to your mom.
Okay. Thanks for watching, Mama. Yeah, today you can watch from our CFP today, Stanley.
Yeah, so
Okay.
I believe you can see my screen.
Okay. Let
Okay,
me. Okay.
boleh
So,
nampak ya? Okay.
ah,
So if you are the
you
smoker,
want
right?
to you want to make it full first? It's not
I
full.
already make it full in my screen actually.
Oh, but it doesn't show here. It just show also all other slides on the left. Full. Is it full? Ah, okay.
Okay, so basically, if we are a smoker, normally the life insurance company that might load us with some additional premium. That is fair enough because the risk of a smoker is eventually higher. Okay, The premium, like this example, I'm using provider from P company. Okay, so the premium might be including with additional 25% premium. Okay, so let's say if this policy is covered for the next 40 years, for with some insured of 500,000, so the additional premium you need to pay is additional 725 ringgit per year. And for next 40 years, you need to overpay about 29,000, So this
Wow.
is considered a huge figure. Can you see my next slide?
No. Now we
Is it
are on the
working?
slide of how to save premium and maximize insurance benefit. But yours is now is now how to save premium maximize insurance benefit with a cigarette picture.
With a secret picture. Okay, so this one is with the smoker. So with smoker, definitely the premium will be higher, 3710 compared to non-smoker is only 2985.
Wait. I think I want to change this. Okay, now can see better. All right.
Can
Okay. Because
okay.
we can see your whole screen, your computer screen. It's not full length.
Now it's full screen.
No.
I think I
think
need to change to full screen.
is it yours? Yours is PowerPoint. You have to change to PowerPoint presentation.
This
But
is
never mind.
PowerPoint.
I mean the one. Okay. It's
Okay.
showing. Sure. Never mind. So okay, continue.
So you can see the secret picture here, right?
Mm-hmm.
Okay. So
No.
if you
No cigarette picture. Now is the save money 29,000. Okay. Now cigarette picture. Okay.
okay. So this is
Right.
the additional premium that you need to pay if we are the smoker lah. Okay. So unfortunately for smoker, basically you need to pay extra, not only on the life insurance but also on the income replacement on the illness as well as on the medical card. That is a norm in the industry lah. Okay. So over the years, over the 40 years, basically you already overspend additional 29,000 ringgit.
Right.
And not on this one alone. Okay, by looking into our secret price in Malaysia, the secret inflation. Last time 10 years ago, the secret is still very cheap, I think below 10 ringgit. Okay, but nowadays we need to spend extra because of the secret inflation. So I think nowadays the 20 packs Marlboro, if I'm not mistaken, I'm not smoker, so I don't know about the price. Okay, so if I'm not mistaken, the price per pack at the moment is about 17 ringgit. Okay, so this is the inflation. Okay, assuming Mr. A, he need to take 3 packs of cigarettes per week. So per annum, actually, you are spending about 2,652 ringgit just for the cigarettes alone. Okay, and let's say if you continue to smoke for 20 years, 40 years, so eventually you have spent additional 106,000 already.
Right.
Okay. By ignoring the cigarette inflation, I didn't put in the cigarette inflation rate here. Assume the price of cigarettes is still remain at 17 ringgit per pack. Okay. And for the insurance premium, you need to pay additional 725 ringgit per year for next 40 years. So it means that every year, because of our habits, of our not so healthy habits, so we need to spend additional 3377 per year just for our secrets and the additional insurance premium. So assume if we are able to put this 3,377 per year into an investment portfolio, 8% return gun. Okay, it can be your share investment, it can be your dividend stocks, it can be a mutual fund or whatever investment vehicle you prefer to put in. So after 40 years, you are able to generate a small wealth, 154,000. Just by
Wow.
changing a small behavior of ourselves. Okay. And
Man,
definitely, I think this one you can buy a Toyota Artist, 154,000. Not bad.
wow. I have to show this to my husband. He's a smoker.
Yeah.
He said, my mom said, I want to learn something new from Stanley. Everyone must buy medical insurance for best.
Yeah, that's very important. Okay.
Yeah.
And definitely you ask me one question, Stanley, if today I'm a smoker, okay, by seeing this figure, I want to quit smoking now. Okay.
Yeah.
And insurer, able to revise my premium or not? My answer to you is yes. You need to quit smoking for next 24 months. Okay. Then you need
20,
to 24 months. Yes.
24 months.
2 years lah, 2 years. So after you quit smoking for 2 years, then you can ask your agent or financial advisor to help you declare to the insurance company saying that you have quit smoking, and then they will come back to you with a revised rate.
But how do
24
you?
months is the common practice for most of the insurer in town.
Yeah, but how do you prove that?
Most likely they will send you for a medical examination at your own cost. Okay, so they will test your, maybe they will ask you to do an X-ray on your lung.
Oh, so
Yeah.
then the
I've
doctor.
helped my client on that, so it's work.
It happened before with your client.
Oh yes, definitely yes.
So you're saying that your client did the test, and then it shows in the medical report that this person has quit more than 2 years.
Yeah, he need to declare to the doctor saying that he has quit smoking for consecutively 2 years. Then we can apply to the life insurance company and ask for the revision of the rates. And
Hey,
indirectly, it will help you to save your premium.
talk about that. I think a lot of people quit smoking, but didn't even know that they can revise their insurance.
Please call your agent. Please call your financial advisor. Get it done. Save your
I
money.
have a lot of friends who quit smoking.
Yeah.
Maybe they didn't even know they can revise
Mm. Yeah.
their insurance.
Yeah.
Oh,
So today I give you a very important tips. Please inform your
very
friends.
important thing. Yeah, because
Yeah.
you can
So
save a lot.
indirectly, you can save your money and buy me a teh. Yeah.
Yes, definitely.
Yeah. So this is the tips number one, very important. Okay.
Okay.
So
Alright.
by changing your lifestyle, you got no choice. You need to change your lifestyle. By changing your lifestyle, your health condition will be much more better. You have a better health. Okay. And definitely with the better health, the insurer will reward you with a cheaper premium. So it's in the value chain. I mean, it works concurrently. Okay. So quit smoking if possible, or you reduce your smoking. Okay. The second one is also talking about the lifestyle. Okay. I'm talking about obesity today. So,
Right.
in the insurance point of view, what is the definition of obesity? So, I'm getting these definitions. I'm using definition from AIA actually. Okay. So, let's say if your BMI index is more than 30, you are already considered overweight. Okay. So how are you going to calculate your BMI index? So Liz, are you familiar on the calculations? It means that you are using your weight, okay, divided by your height times height.
Yeah. Right.
Sorry, this is times. Yeah.
Okay.
Yeah. So let's say if your BMI index is less than 30, definitely your case will be issued at the standard rate. No problem. But let's say if there's a bit of best, also no worry, they will still recover you. But whatever more than 30, 33 above, then most likely the insurer might come back with a ruling. Okay. The ruling rate can be from minimum to 25% to
Right.
200%. So this is a killing point. Okay.
Right.
So a lot of them, they indirectly they are unaware they are paying a ruling premium on this part.
Okay. So, but usually when we take the insurance, then we never declare our BMI. What? How do we?
Because as long as in the proposal form you have declared your weight and the height, the computer
Oh,
will automatically generate your BMI in their
I don't
underwriting
remember.
department.
I don't
Yeah.
remember whether I fill that up or not.
So this is a very important criteria by life underwriter. They will use this to determine whether you are overweight or not. Okay. If the BMI is more than 44, frankly speaking, you will not eligible to buy any life insurance. It's very hard to get any life insurance cover unless
Really?
we go for guarantee issue order. That is another type of insurance. That is only covered on your death benefit.
Okay.
Okay, but for medical and illness, definitely is not being covered. No way.
So what you're saying is that when we lose weight, also we can also ask to revise our premium.
If the person is obese previously and he have done a lot of exercise, he back to the healthy lifestyle, and the BMI has been reducing, yes, they can write in to the insurer requesting for revisions of the loading rate. It can be done. But definitely the insurer will ask you to do a medical examination at their panel doctor, and with the panel doctor confirmations, the weight is reducing, then they will consider whether it can be reduced or not.
Okay, okay.
So let's
Then,
say earlier the premium is losing 50%. I mean, with the reduction of BMI index, then you can write into the insurance company and request for revisions of premium loading rate. It can be done.
oh, this is
Okay.
what you call
It can be
loading
done during your policy anniversary date. Let's say if your
anniversary.
policy is in force on today, that's 10th of April, right? So 2 years later, if my BMI able to get it down, so you have the right to write in to the insurance company asking for the revisions of the loading rate during your policy anniversary date, and it should be done before that. Maybe it can be 1 month or 2 months before.
All right, Mama, you hear that? If you lose weight, you can try and ask for a better rate. You lost a lot of weight also from before, so maybe you can get a better rate now.
Yeah, so I just share with you one of the real example of my client. Okay, this gentleman is with obesity issue, and his body is very huge lah. So previously he bought a medical plan from me, and what you can see here, the column here, the extra premium number, the extra premium here. So the basic premium is only 1679, but with the additional loading because of the overweight, so this gentleman has been loading with additional 50% premium. So indirectly, he need to pay extra about 950 ringgit per year for this
What?
plan because
That's
of
a
the
lot.
obesity. Yes, so you
That-
consider for the next 20 years, 30 years, this will
Wait a
be
minute.
a huge amount.
Wait a minute. That means all these points, right? The No wonder the agents always ask, "Are you a smoker? What's your
Yeah, yeah,
But they
yeah.
never tell us if we do that, that will make the premium go higher.
Uh, they will only come back to you when the medical underwriter decide that is loading of premium. So let's say if your BMI index is optimal, then normally there won't be any loading on that part.
But they
But
will
it,
still have loading if it's like certain things lah, isn't it? Like it's not a bit.
apart from obese, it can be other things. I mean, maybe because when we talk about obesity, then the complication arise from obesity is a lot of things can become out. Example, diabetes, okay, kencing manis, the fatty liver issue. I think a lot of Malaysian they have this fatty liver issue now. And then it might cause severe heart disease as well. Hyperlipidemia or hypercholesterol is a norm for obese people. I think 8 out of 10 of my clients with obese issue, normally they have this hyperlipidemia. It means that your cholesterol level is very, very high, ultra high. That it can cause a hypertension, stroke, and other illness coming in.
Right. Okay.
So therefore, the insurer they need to look you upfront because of the obese issue, because they foresee in the future this type of illness might be triggered in.
So
And
they
unfortunately, a lot of Malaysians they are overweight now because
yeah, but
our lifestyle,
the
less
thing is
exercise.
how come nobody I guess this the thing if only we knew this information, then it will also encourage us to have a healthier lifestyle because it will
Yeah,
affect our you know managing
yeah,
of our own money.
yeah. Like this gentleman, right? The premium
Uh,
is been looting for 950 ringgit per year.
yeah.
His heart is very, very pain lah, sangat sakit hati lah. Because every year he need to pay additional on this. Okay. So how he do is because of this penalty, he decided to do a lot of exercise. Now I see his Facebook every weekend also go to jogging lah, jungle trekking and so on. So he aim to lose the weight because of want to save the premium. So
Okay.
indirectly, it also become a motivation for you. I mean,
Okay.
to on diet.
So how do we ask our agent, in terms of how do we ask our agent, like what are the loading? Is the loading so that we can see how we
The
can?
loading normally will appear in your offer letter, counter offer letter, if there's any loading. Let's say if the case is accept standard, then the case will just accept standard without any loading. No? But let's say if any one time they come up with a loading or exclusion, normally your financial advisor or your agent, they will come back with you a counter offer letter. Then you need to sign on the CUL.
Oh, so if don't have the counter offer
Then you
letter,
are
that
safe
means
lah. Yeah, it means
same
that
lah.
your
No,
yeah,
no
yeah,
loading lah.
loading. Your case is issued as standard rate. Yeah.
But then the smoking, those who are smoking, is that one got loading, what, right?
Smoking rate and non-smoking rate, there will be a difference, especially on the medical cards, as well as on the early stage illness. There will be a huge difference on the premium. Easily, you can save about 25% to 30%
Okay,
on the cost of insurance.
my mom has a question. I will ask my agent for better rate. I paid for my insurance for more than 20 years, but only admitted 3 times. I must be a good customer at this time. AIA approved my admission within 20 minutes. You think I can reduce premiums at 69 years old? My mom asked.
It will be quite impossible because of the medical history,
Mm.
and we need to understand what type of medical history you encounter at the moment.
Ah,
Yeah.
so when it's already admitted, a bit difficult lah.
Because you already have your medical history, so they might evaluate what is the medical history. If due to the three high, there is a hyperlipidemia, hypercholesterol, the blood sugar is high, or even hypertension, then your case of to reduce the premium is very slim. It's quite mission impossible.
Mission Impossible.
Yeah.
Okay, tak apalah Mama. We find you make more money. Help you make more money and to pay for the insurance.
Yeah. So this is talking about the lifestyle. This is the second point. So the first 2 points I'm talking about the lifestyle. As long as you are able to quit your smoking, you're able to exercise daily, keep fit, okay, remain your BMI index, definitely you no need to pay extra. Okay. And with the additional money you save, basically what you can do is you can use the additional money you save, put into the investment portfolio based on your risk appetite, based on your investment objective, based on your investment tenure period. Basically, you can build another wealth for your own self. It can be a children education funding, it can be a retirement funding, or it can be your business startup funding as well. So don't underestimate. Yeah, if you implement a daily savings habit, the impact is very huge, I would say. Okay. The third point is talking about now or later. Okay. Why I say so? So some of my clients, they will ask me, Stanley, should I buy the insurance now or I need to wait another 10 years later? I think a lot of clients, they will ask this similar question as well. Because I don't see the urgency, I need that now. So why not I just postpone the decision for another 5 years or 10 years later when I need, only then I look for you, can or not. So my answer to them is you should buy now sooner rather than later. Okay, if possible, you buy now, else sooner, but please don't wait for another 5 or 10 years. Why I say so? Because if you go through the premium here, so let's say this gentleman at the age of 25 years old, so he need to buy a 300,000, just a simple life insurance. So what you can see here is at the age of 25 years old, the premium only cost him about 2253, So per month is only about 197 ringgit. So it's quite affordable. Quite affordable. But let's say if you decided to delay your decision for another 10 years later with the same sum insured, provided you're still healthy, okay. So the penalty for you is additional 1,248 ringgit. Just because we delay our decision for next 10 years. Why this thing happen? Because the insurance premium is determined by using our age. Age is a very critical factor to determine the pricing of the insurance premium. So what you can see here is from 2253, the premium has been increased to 3501. So if this policy is if you have already delayed for 10 years, So you need to pay additional 12,000 already with the subsequent years to cover. So let's say this policy is covered for next 45 years kan. So it means that you are paying 1248 additional for next 45 years. So it's a huge figure.
So if they take it earlier, their premium will be
Cheaper.
not
Very
stay
cheap.
put stay put the same for the next 10 years. Even the
Yeah,
so
yeah.
it won't be increasing lah.
It won't be increasing. It depends
But
on what type of policy you buy, whether you're buying a term policy or investment linked policy. If you're buying term policy, the pricing will be fixed for your entire term. For this gentleman, it's fixed for another 55 years. It means that this policy will cover until his age of 50 years old. Okay, but let's say if you are taking investment linked policy or the linked policy, then you need to be very precautious on the premium sustainability period. It means that how long with this premium, how long you can sustain. There are two types.
so
Okay.
the one the investment link or Takafu link it goes higher and higher the premium over years.
For investment link and Takafu link, the mechanism of this is your cost of insurance will be increased according to your age. So it will depend on the excess of the investment return. How much is it possible to cover on your incremental insurance cost for the entire insurance tenure period?
Wait.
So
Okay, so
yeah,
that means, for example, they are paying, for example, 300 ringgit a month for this
yeah,
medical investment link. Yeah.
yeah,
So
yes,
for that 300, initially the cost of the insurance probably 100 ringgit,
yes.
and
So
then
200 will
200
be invested into
investment.
your, yes,
So over the years,
your
then
cost will increase.
the cost of the insurance will increase higher and higher, and your
Yes,
investment cost will be investment portion will be less and less.
yes. So there will be reaching a point where your point X and point Y is meeting lah. So at that time, then most likely your insurance company or your financial advisor, they will give you a call lah, or they will send you a love letter saying that Mamaliez, your insurance premium is insufficient to cover the incremental insurance cost. So that will be come in with a suggested top-up premium. So it's quite normal nowadays, especially on the medical rider.
Oh, I didn't know that.
Yeah. So
Because
you
I
don't expect your 300 can
yeah.
sustain until your age of until your age of 100 years old. It's quite impossible.
So how
So
do I know?
you have
How
the
do I?
right to
Yeah.
call in and check with your respective insurance company. Please call
Uh-huh.
into the customer service, or you can check with your respective financial advisor or insurance agent to check on the policy sustainability period. Is it sustained until your age of 60, 70, 80, 90, or 100 years old?
Oh,
And
I
then you have
didn't.
a mind when you need to do a top up. That's very important.
Oh my God,
But,
I didn't know
but it
that.
also depends on what is the objective you buying this policy. Okay, let's say you just buy a policy for debt cancellation purpose because I want to cover my loan, mortgages, and so on. So basically, what you need to do is you need to check how long is your loan tenure period, whether the policy premium can sustain for the entire loan tenure period. That's very important. But let's say you buy it for the legacy purpose. So basically, this policy will cover until our age of 100 years old or until we left the world. So the premium, you need to check whether it can be sustained at least until your age of 80 years old. Because for Malaysian female, I think average age is about 84, for male is about 78. So you need to counter check on that. And definitely for your medical rider or medical card, the premium will increase according to your age. We can't run away on that.
I tell you, Stanley, a lot of people don't know this, and I don't know this, because I thought I pay every month fixed. It'll be like, oh, forever, my medical card will be covered. I just have to pay this much for 200.
Yeah.
I didn't
Another way
know.
you can cross check on that is you can always refer back to your insurance contract booklet. Okay, the incremental cost should be clearly stated in your insurance policy contract, and at what age, what is the cost, and so on. It's fully transparent nowadays.
So now we just have to ask our agent or check. Most of the time, I tell you, most us customers are too lazy. We don't even
Yeah,
look
that is
at
your right.
that. We
Yeah,
don't even look at the
that is
fine
your
details.
consumer right to check. on what is the costing actually.
Yeah, but
And
the thing,
if you are too lazy, they also will send you the e-statement every year, right?
no,
You can check on
the thing is, this was not pointed out to us when we buy insurance. You
normally
see,
it will be pointed out. I mean, the thing is quite transparent nowadays.
I don't know, but I don't know whether that's pointed out because no, nobody pointed out that it will, over time it will go there. We remove that, finish. So no one has ever. I mean, no, I didn't know.
Yeah.
I didn't know that at one point that I have to top up on my current medical insurance. You know,
I see.
so that means I need to find out at which the sustainability period of my medical investment linked insurance, right?
Yes, it's
So
your right to find out. You
what
can
would
call to the customer service or you can check with your financial advisor or insurance agent.
what would be the best option? Do you think like I should get a separate term life insurance that's fixed? That means it's fixed for the period of 20, 30 years, and then a separate standalone medical card. What do you
Well,
think?
it will depends on your objective. Some of the client they want to get the easy way, so they put all in one into one policy. But let's say if you wish to plan ahead a policy for your debt cancellation or as a legacy purpose, my personal suggestion to you is it will be best if you can separate out the policy from your medical cards.
So medical
Because
card
different
should be
policy
separate
will
from
need,
the.
yeah, because normally different policy will serve for different purpose unless for your minor children you can put everything into one policy lah. Because it's a 3-in-1, it's a total health solutions policy, then you can put everything into one because the cost of insurance for children is very much. I mean the cost is not substantial, it's very cheap policy. Maybe
Okay.
you can get maybe 200 per month, you can get quite comprehensive cover already. From
Okay.
life, illness, child illness, to early stage to terminal stage, as well as on the medical rider. Then all in
Okay.
one can be covered.
But I need you to let us, the audience, know also to highlight for those, the Muslim one, especially
Mm,
when they take all in one, medical
mm.
card and the life in one card. What are the
Yes.
risks of what happens after that when they, let's say they don't have the takaful or what will happen to it? How do they claim?
So for
Um,
Muslim, either you can go for conventional policy or you can go for takaful policy. I think it's okay. It depends on your choice because the principle of the insurance, I believe, is still the same. Okay. Just for the takaful policy, they will put in the takaful compliance. The funds will be managed and monitored by the Sharia Compliance Council. Okay. And you also need to take note that for takaful policy, there's a tabarruk fees that need to be paid for the financial advisors and so on. Okay, so in terms of claims, I think the mechanism is quite similar. Okay, the insurer will honor based on the insurance contract and based on what is the information that you disclose. And touch wood, if the person is passed away, so let's say if you are buying a conventional policy, definitely
mhm.
the insurance they will pay directly to the nominee you mentioned. But you need
Yes.
to take into consideration is because for Muslim we need to comply to the Sharia law. So the wasi might come in. I mean the legal aids might come in and do a dispute on that. So in this scenario, the money will still need to distribute up according to the Sharia way. You can't run away on that. So if you have this concern, what you can do is you can set up what we call that pre-HIPAA or by using takaful policy or conventional policy, and you can engage a trustee corporation to hold and trust the claims money for the benefit of your legal aids. It can be done.
Okay, so I just like you mentioned earlier with me before the show that if somebody is on a conventional policy, a Muslim, and then if they have the medical card plus the life all in
Yeah,
one, okay.
yeah.
If let's say they have the nominee, and when they
Mm.
have the nominee, and then it'll be hard for them to claim because you were saying about trustee, something like that. Can you
I think the claim part is not a problem because the
the
insurance
trust?
company, regardless of who is a nominee, they will still pay. paid to the respective nominee.
But you
Okay.
were saying about trustee, something about trustee have to go through trustee lah, if it's in blah blah blah, all that.
Let's say you plan ahead to buy a policy only for my daughter, example. Okay. So in this scenario, how are you going to protect your daughter is you can set up a Takafu Hiba policy, Takafu Hiba trust by putting in this Takafu policy or conventional policy as a trust asset into the solutions. So when the life assured pass away, the lump sum will be claimed out by the trustee populations, and this money will be for the benefit of the particular daughter that you want to take care of. It depends on your objective. Some of them they want to take care of their daughter. Some of them they want to take care for their siblings and so on. So it will depends on your needs. It can be done.
So you're saying if they don't do that, then what happens?
The money will still pay out to the nominees. It will depends on whether there will be a challenge by the family members or not. So if there's a challenge, then the person who received the money just acting as a trustee, he will need to take out the money and return back to the respective nominees mentioned in the Sharia.
Okay. So nowadays I've been hearing about Hiba insurance. Okay. So and then some of my friends, what they actually already have their own insurance, Takafu insurance, either Takafu or conventional. And then there's agents now come to them, hey, buy this Hiba insurance. If not, your kids won't get the money, blah blah blah. So they get panic. Also, maybe they buy Hiba insurance, assuming that they already done the gap analysis on their insurance needs and they already bought insurance that's enough already. Okay, it's not necessary for them to buy another insurance that says with Hiba, correct? What they could do is
they can assign the conventional policy into the insurance trust legal document. It can be done because I also have my Muslim client who use conventional policy for the Takafu trust solutions. Because for the trustee side, as long as they are able to accept non-Takafu policy, I think it's okay.
Okay. Oh, okay. This is a very, very fantastic new information that I learned today, which I myself need to look at. Okay. Yeah. So.
Okay. I think now we're back to the topic again. Else we are able to finish. Okay.
Sorry. Okay.
Yeah.
Go back.
So just now I'm talking about you buy now or buy later. Okay, so if you buy now, basically you save a lot of premiums because if you buy the insurance at your younger age, definitely you can save a lot compared you just make a decision 10 years or 20 years later. Okay, so this will be very important. And the fourth point is talking about the term policy and whole life policy. I believe this you also have your financial advisor to tell you whether you want to buy a whole life policy or term policy before that. Okay, so what is the difference? When we talk about whole life policy, it means that this policy, regardless of your health condition, it will cover until your age of 100 years old. Okay. The drawback is this type of policy, the premium might be more expensive, and it depends on which insurance provider. Some of them you might need to pay the premium throughout the whole life, or you can make a limited payment, maybe 10 years, 20 years, 30 years. It depends on the respective insurance provider. Whereas for term policy, it means that I just want to cover for the next 5 years, next 10 years, or next 20 years. So this type of policy might be cheaper. Okay, so by looking into here, this policy is from Manulife. So this is a 5 years renewable term. A lot of businessmen in town, eventually they can save a lot of premium if they know the ways to buy this type of policy. Example, today we venture into a business. Example, okay. So I venture into a business with you. Okay. So it can be a housing development, it can be a business development, and so on. So my family member might worry, touch wood, if yesterday I'm not around. So how am I going to claim back my entitlement? And I believe your family also might worry as well. So let's say if this project is only ending in 5 years time, what you can do is you can buy a 5 years renewable term policy. Okay, and basically the premium will be cheaper. Okay, compared to the whole life policy. This is some of the ways that we can use to save a lot of money from here. Because if you're looking into this whole life policy, a same coverage of 500,000, I need to pay 6,855 ringgit per year. Whereas for the 5 years renewable term, with the same sum assured of 500,000, I just need to pay 1,110 ringgit for my next 5 years.
Oh, so you're saying it's cheaper, but it's also can be renewed lah, renewed every 5 years, is it?
This one is guaranteed renewed until your age of 64 years old for this provider lah. Okay, so in year 6, the premium will be increased a bit now. Let's say from 1,000 plus, this one is in year 6 is 2,000 already. 2,000 plus, sorry, still 1,000 plus. And in year 11, the premium will be increased again, and in year 15, in year 16, the premium will be revised again. So this is more towards on the short-term financial objective. Let's say you commit a mortgage loan only for 10 years, or you venture into a business with your business partner for the next 5 years. So this is a good policy, then that can save you a lot of money. And the excess money, you can put back to your business, or you can use it to do your investment purpose.
I don't understand.
Let's say you have cash flow 100,000. So this policy will just need to incur you premium of 1,001. Okay. Compared to the whole life, you need to pay upfront 6,008 already. Okay. So basically, every year you already save about 5,000 plus. And with this 5,000 plus, eventually you can invest back to your business, or you can put it into your investment arms.
Oh, so what you're saying, we're saving that money that we save could have put in the business instead of on the whole life lah. So that's what you mean. Okay.
Yeah, but of course, some of the financial advisors, they are not agree on that. So say if this is for the long term, yeah, definitely. If your financial objective is for the long term, example for legacy purpose, then this type of policy might not be suitable to you. So when we talk about whole life purpose, normally you still need to back to either Takafu link, investment link, or whole life conventional policy. Okay, but the premium definitely will be much more expensive.
Oh, that explains.
So I hope you catch a ball. Yeah.
No, like you remember, I don't know what I showed to you what I have. Like the one that I have with in the one I bought in Qatar. Is that whole life or term life?
That is considered offshore term policy. That will be matured at the age of 65 years old.
So is that term life or whole life?
It's a term life.
So that one is term life. That's why it's cheaper.
Yes.
Or what I get in Malaysia, if I want to do it, the one that's been proposed was whole life. Is it? That's why it's higher.
It depends on your financial objective. And see what is your needs. So let's say if your financial objective is just to cover for the short term, basically what you need to do is you just need to cover using a term life you do. Okay, because the ultimate objective is touch wood, if there's a triggering event happen, the insurer will still pay you up on the net benefit. Not a big deal. Okay, but let's say if you wish to plan ahead for the legacy, you wish to leave a guarantee funding on top of table to our children at my age of 100 years old, then definitely you need to use something like a whole life policy.
Okay, got it.
So by putting in a proper financial literacy, you need to review your cash flow. You need to review your financial objective every year. So that is why normally how we manage our client expectation is normally we will need to have a meeting with our client annual basis to see if there's any life changes, or if there's any ad hoc changes to their life, then we will see how to cover on the gaps and so on. So sometimes we just need a short-term term policy we do that can be covered.
Right. Okay.
And number 5 is very important. Okay. If you have a lot of financial concern, my personal suggestion is please engage a licensed and independent financial advisor, because how we manage our client expectation is, let's say you just want to buy a 300, in this scenario is a 350,000 life insurance, because this is one of my clients, she's a Muslim, she's a teacher. So she asked me to propose Takafu and non-Takafu in this scenario. So I put 4 providers in this scenario from respective insurance company, and she want to see what is the benefit and what is the costing incurred. Okay.
Right.
So for Takaful provider, the premium is about 300 plus per month with 350,000 sum assured. She's already at the age of 43 years old. Fortunately, she is an occupation class 1. There is a picture. So the premium is a bit lower. Okay. Whereas for non-Takaful, it seems that number 4 is quite attractive for her. Okay. She just need to pay for 250 per month with the death benefit of 350,000, and there's an additional disability benefit payout. It means that they pay in double in this scenario. They pay in double.
Right.
First time disabled, via 350,000. Upon the disease, there's additional 350,000. So in total, it's 700,000.
Right.
And she just need to pay 250 ringgit per month, and this policy can sustain until her age of 70 years old. Because the ultimate objective for her is she want to pay off the loan, touch what something bad happened to her. So she found this policy is very useful for her.
Okay.
So
So
understand
yeah.
so far?
Yeah.
So
Yeah,
far,
because
how we do is we champion your interest. We are representing you. Okay, so we need to understand what is your concern, what is your needs, what is your budget, and from there we come up something
yeah.
independent for you. So you can do a comparison and you can make a decision from there, which one is more suitable to you. This is
Right.
how we practice.
Yeah.
Okay, so when we talk about the process, basically how we do is first of all we need to understand our clients. Okay, we will have our proprietary process that is called financial compass to understand your needs, and we will need to do some fact finds. Okay, and then we will see what is your needs, and only then we can do proper recommendations. So this is our advisory mechanism work, right? Let's say if the life insured she has this debt cancellation concern, so how are we going to help her is we will need to provide her unbiased advice, okay, and see which is the best in town that
Right.
can best suitable for her. Okay.
Yeah.
So far we are representing about 15 life insurance company, including 4 Takaful providers in Malaysia. So we are able to provide truly and unbiased solutions for our client.
Yeah, that's the
This
best.
is yeah. Okay, and that is number 5. Now we talk about number 6. Number 6, do you know when you buy life insurance, there's a discount now? Like
No.
you like to go to supermarket, you always see what is the discount item gun.
Right.
When we talk about discount, it doesn't mean that you ask a discount from your financial advisor, not in this way. Okay, because that is our bread and butter. Please respect our professionalism. But when we talk about the bulk discount, is do you aware if you buy something big sum insured, normally the insurance company they will able to offer you a discount rate. Let's say you just want to buy 100,000 sum insured gun. Most likely they won't offer you any discount. But let's say if you decided to buy a 500,000 sum insured, definitely the cost of insurance per thousand will be cheaper compared to 100,000 sum insured.
Right.
So you need to aware about the bulk discount. So during the gap analysis, then you need to understand what's the sum insured you need. Okay, whether you need 100,000 or 500,000 sum insured, and eventually, let's say you need $1 million coverage. I believe the discount will be higher. So you need to understand how the insurance company work on this. And now for the most of the local insurance provider, normally they will provide discount in terms of cost of insurance per 1,000 sum assured.
Oh. So
I hope this is not too technical for you.
no, but normally does the agents usually offer this to us as well, or we have to ask for it?
It will depend on your needs. Let's say your gap is only 100,000. So it's not necessary for you to buy 500,000 unless you tell me you got extra budget, you got extra cash flow not be utilized. Yeah. So let's say if your gap is 1 million, basically the product itself, I would say it should be already discounted on the cost of insurance per 1,000. I believe so. Yeah.
Already automatic lah.
It depends on respective life insurance provider, whether what type of product the agent offer to you. If the agent offer to you something non-discount, then you can always come back and double check with us whether this product is with discount or non-discount.
Okay. Got it.
Okay, so I hope today I'm able to give you some open eyesight on that. Okay,
Yeah.
and number 7 also very important. a lot of my clients they like to pay monthly, some of them they like to pay yearly. Betul tak? I say I very mafan lah. I mean I want to pay you one yearly. So for conventional policy, okay, if you decided to pay yearly basis, okay, definitely you will enjoy savings of premium up to 5% per annum. Okay, in this scenario, I'm using Zurich Life Insurance. Okay, so the monthly premium for this 100,000 whole life policy is 261 per month. But let's say you use this 261 per month times 12 then, I think you're paying about 3,001 or 3,002 already per annum. But let's say if you have your cash flow is positive, you can make a premium using annual basis. Basically, you can save about 200 plus per annum. It's the same policy, you know. Yeah. So this is how you manage on the cost saving part. But of course, when you are talking about Takaful link or investment link policy, regardless of you pay monthly, quarterly, half yearly, or yearly, the premium will be the same. The only difference will be if you pay yearly, they will have a large sum invested into your Takaful investment or unit trust investment in the conventional policy, and you are able to generate a higher cash value if you are paid yearly. And you also need to take note about the policy administration fee charged monthly by the insurance company. Okay, I think some of them they are charging about 8 ringgit per policy per month. Okay, so it's a huge money for life insurance company. Okay, and now you know how they make money. That is the policy because they need the money to support their staff, right? It's quite fair, I would say.
Got it.
So let's say if you pay yearly basis, the policy admin fee will be cheaper by 1 ringgit per month normally.
Okay.
So this is another way that you can play around and save your premium. Okay. So it will. So the initial stage is you need to understand what is your cash flow positioning, whether your cash flow is financially healthy. If it's financially healthy, then you have the right to choose whether you want to pay annually or you want to pay monthly basis. But let's say today, if you are buying a conventional policy and you pay monthly, please take note of the additional premium you need to pay on that. So over 40 years or 50 years, that will be a lot of money also.
Yes, definitely.
Last but not least, if possible, try avoid to buy unnecessary riders in the insurance policy. Because when we talk about Takaful link policy, when we talk about investment link policy, normally it will come with a lot of the riders. Okay, example of the riders. Let me show you. This is the common type of riders you can see in the market. Waiver premium, payor, illness buyback, terminal illness, early stage illness. So you need to be very clearly understand what is your gap, what is your needs, what is your budget. Only then you can decide whether I need this additional rider or not. It doesn't mean that all the rider you need to put in one. So because every rider it comes with a cost. At the end of the day is you need to look into your cost and your benefit analysis. You need to very clearly to understand what is your needs, and from there only then you can decide how to cut down your costs and so on.
Okay, got it.
Okay,
Wow,
so yeah, it's same lah. Like today you want to buy a BMW, I believe the salesman will come to you as well. This your BMW. You want to put in accessories, you want to put in the newest camera, you want to put in the additional safety things, tinted window lah, everything, and so on. So with all that, it will be additional cost to you. Same for life insurance company. So let's say today you want to put a lot of things inside, then basically your premium will be higher, or your cash value will be lower because you put in a lot of rider, and this rider indirectly it will utilize your cash value inside.
Okay, got it.
So this is the 8 types of tips today I can manage to share with you. Okay, so let's redo some recap here. Okay, I think we are on time. Yeah. Okay. So how to be a smart consumer when we talk about insurance planning? First of all is if possible, please change your lifestyle. Practice a healthy lifestyle. Okay, become a non-smoker. Try to reduce our weight. Okay, make sure our weight is within the BMI. Then we can save a lot of money from here. Okay. The third point is talking about when you buy sooner, later, if possible, if your cash flow is okay, please visualize your cash flow as well. okay, to make a sound financial decision that if possible, you can enroll your life insurance today. Because if you delay your decisions, maybe for another 10 or 20 years, definitely your cost of insurance will be increased. And at that point, if our health condition is not in the optimal, it can be in substandard, definitely the insurance company might look you with all the X factor as well. So indirectly, your cost of insurance will be increased a lot. Okay. Number five, talking about the term and whole life. So you need to understand why you want to buy this policy for. If it's only for the short-term objective, you have the right to buy on the term policy. But let's say you want to create an additional legacy for your loved one, yes, you can either enroll for the whole life policy or investment linked policy or the Catholic policy. It can be covered until your age of 100 years old. And fifth, very important, you want to do comparison, you don't need to knock the door from one insurance company to another. That is very tiring. It wasted you a lot of time. So why not you engage an independent financial advisor, because we have been fully licensed. Okay, we are competent enough to advise our friends and our clients which one is the best solution for you. Okay. Number six, take note of the bulk discount. Every one of us, we like to get discount, betul tak? Either you go to supermarket, you go to everywhere, we like discount. Even we go to pasar, also we ask for discount.
Right.
So for insurance, definitely there's some discount. Okay, so you need to aware of that. And paying your premium yearly, quarterly, half yearly, or yearly, definitely there will be a difference on the actual cash flow you pay out. Okay, and take note, don't buy whatever not necessary. Just buy whatever you need. I think that is very, very important.
Yeah, amazing. Thank you so much, Stanley, for all the tips. I learned so much today. Now I have to really look back on all my insurance and find out what are the things that I didn't know, aware of, and really look into it, because I didn't know, And you're right about getting engaging the financial advisor like you, who can give unbiased advice to us.
Yes, that's very important.
Yeah,
I think
yeah.
that's very important.
I think a lot of people don't know, Stanley, that this is.
Mm.
I also don't know the CFP can also do this and all that, and that can buy insurance for you guys. I think they are afraid that they have to pay more or what. Maybe they say, CFP, alamak, kan? They don't know.
It depends on the needs basis. So my suggestion is, before you make any sound financial decision on what type of insurance you need to buy and so on, if possible, please understand what is your current situation right now. Okay, where are you right now? What is your cash flow positioning right now? What is your gaps? Okay, and from there, we will hold your hand together and see how we can help you to improve on that. Okay, that is very important. So you need to understand where are you right now. It's very important.
Everybody, please write to us, show a comment. You can contact me or contact on here. I can bring you to Stanley, or you can just contact Stanley directly on his LinkedIn.
I think let me share my LinkedIn. Can see or not?
Let me see.
So this is my email and this is my LinkedIn. So if any one of you have any financial concern, feel free to drop me an email, or you can DM me in LinkedIn. Okay, so I should be able to respond to you.
Thank you so much for joining us, and thank you so much. And Mama, thank you so much also for that. My mom was saying here, no problem except the explanation. Money cannot buy health, buy insurance. Not at 69. Thanks. Yes. Yeah, I think a lot of people, I don't know how many percent you think in Malaysia who don't have insurance or even medical insurance. Do you know? How many percent?
I think most of them, they will have insurance, but then it's undercovered. Most of them, they undercovered, or the second type is they overpay.
Okay.
Only these two.
So
most
if
of
you
Malaysians, they will have insurance.
Yeah, so if you want to know whether you are undercovered or overcovered, please come and meet Stanley Hon, and he will advise you and do assessment for you. Yeah. like
Yeah.
he's doing assessment for me, and I'm so happy that I actually met him, and he's working together with my other CFP. So I've got two best people on my world. Always, when you want to have a better financial health, engage the experts to do it for you.
Yeah, next time we should invite our friend together for the show. I
Yeah,
think he's
yeah.
a bit shy, so maybe we invite him together.
Okay. So thank you so much, everyone, for watching, and I hope to see you guys next week on Saturday, and on Friday night on my behind closed door live shows or 10:30, and Mamaliez Want to Learn on Saturday at 4 p.m. Okay. Thank you for joining us. Bye bye.
Okay. Thank you, Mama Liz. So okay, the